CAD yen. Okay, so what are we looking at here? We got it's very bullish, way above this moving average. Been slow recently, but making higher lows and a little bit higher highs. You can see price. This was just a baby zone, but it wasn't very significant, which I knew. We need price to break above this 4-hour moving average for sure. And then I'm just looking here. We're going to adjust these whole levels because this 106 level is actually holding, I think. So this is good. We'll just jack these up a little bit. This is why we always start at the beginning of the month. We just put the monthly range in just to see what we could be potentially looking at. And then once we know, we know. I think the monthly range is about, this is saying 550. Is that reasonable? Yeah, 550 is reasonable, yeah. For CAD yen, okay, so this 106 level seems to be holding a little bit. I'm actually going to move this up a bit. We don't have as far as like the wicks go, we just have this little baby zone, which it can definitely break. I can't even get at it from the daily here. Hold on. Oh my god. Just go like this. So you do have the zone right around this 106 level. It's not great yet, but it's given us an idea. So you can see recently price came down right below this 106 level, and this is on the 4-hour, so not as significant as the daily, but came down, rejected, huge bullish engulfing candle, and broke all these previous wicks here, came up, and now is pulling back, touched the zone again, pulled back, and we'll see if this actually wants to go lower. This might not want to go lower, and think this might be the start of our bull run upwards, to that monthly range. And what we could do is just wait for this area to be broken, and then target higher. So yeah, we're gonna lose. This is where you kind of have options, and it becomes a game of risk to reward, right? So basically, if you took a position like this, I don't even know, you would have to put your stop, like, you want to give it some space because the wicks can pull through this zone is so thin. Wicks can push through this zone quite a bit. So let's see, if we set our entry at 105.90, then yeah, we gave it like a 40 pip room. If we gave it 40 pips of room, then this is what we're looking at. So I mean, this is fantastic. So this is how this works. If price comes down and you decide to enter at the top of this zone, and you're basically banking on the fact that it's going to reject the zone, and this is the end of it going down, and then it's going to go back up after. It's going to come down and then just go straight up. So there is that option you could bank on, which I don't think is actually that bad. But there's another option. So, and if it comes down to sheer risk to reward, here we'll play this out here and just see. So that would give you, in this situation, targeting this full monthly range, that would give you, we'll call it a 14 risk to reward, which is insane. It's very, very, very good. And I think it's actually pretty reasonable that could happen. But there's also this scenario. So we're looking at a 14 risk to reward. If we move this up here and we wait for price to break this zone, in doing so, we'll know that there's been higher lows, higher highs, so we know those are established. Price will have broken this 4-hour moving average, so that's amazing. That we know. Then we know that there's a lot more bulls in the market, and it would have broken this 1-hour moving average as well and closed above it. So we know that there's short-term and long-term bullish momentum in the market. You can see it would have broken all these wicks here, which there's a daily zone here as well that it would have had to have broken, and then we'd have a lot more confirmation, and then you're looking at about an 11. So the difference is you take a smaller risk to reward, which is 11 instead of 14, which is very, very good, and then but you have all the confirmations that price is going to go higher, which is breaking this 4-hour moving average, breaking this zone here, higher highs, higher lows, and then you just have a much higher probability with a little bit less reward, but much higher probability. So this is what I'm probably going to wait for as of right now. I mean, we'll see what price does when it comes down here. It might produce something that I like better, but as of right now, oh, that was the wrong alert. That was the moving average alert. But we're gonna set an alert for this price here, 107.10, right at the top of this little zone here. And then as far as right now, I think that's my best bet. I think that's where I like. I think there's a ton of confirmation. If price breaks the top of this zone, there's a ton of confirmation, and I'm still able to get in at an amazing risk to reward. And I'm able to get in, that's another thing. So with this trade setup here, waiting for price to come up to 107.10, you get a much better, I'm entering the trade as it's moving, versus like if I enter it now as price is down here, it could take even a couple days for it to come back up here, or it could break lower, or it could go really flat, or then you end up getting stuck in a trade. But I know if price breaks this zone up here and I get in right at the top here, I'm entering at the top of the movement, so I'm entering on the way up. So that's much better of a position to be in, and you'll be in it for less amount of time, and basically as soon as you enter, you're most likely in profit. You're not in huge drawdowns, and you're not in a consolidation phase where you're just stuck in it, and you're not, the drawdown's not bad, but you're just hanging out for 3 days in consolidation mode. So we don't want that. We want to catch it at the top of the move, the beginning of the move. So that's the play on CAD yen. That's what we're gonna wait for price to break this area, and then hit a, and you could even, like, that's the thing, is even if this prints a nice candle and breaks this zone with a good retest, I mean, we can shorten this in half even. So we can definitely tighten that stop if needed after. If price is on the uptrend, then we can tighten that stop, but down here you can't, because you don't know. I mean, as far as liquidity, this could push right in and then get rejected, but it would stop you out. So I mean, this is, to me, the better play right now, but down here is a good play as well. So welcome to take either or, whatever makes sense to you, but I'm going to wait and wait for price to come back up to 107.10 and then enter there. So that's CAD yen.